Hi there, my name's Ali. I'm a senior staff writer and editor at autoinsurance.com, and today I'm going to talk about Mercury auto insurance. I'll cover who Mercury is best for, who it's not best for, and Mercury's coverage option for rideshare drivers. Who Mercury is best for? It's best for those who can bundle their policies with Mercury, and it's best for individuals with moving violations on their record, specifically DUIs and speeding tickets. So let's take it one category at a time. As a State Farm customer myself, I know firsthand just how much you can save with multi-vehicle and home bundling discounts. With Mercury, you can bundle your home and auto plans to save about 15% off each policy. And individuals with bad driving records, that's DUIs and speeding tickets, can also save a pretty significant amount with Mercury. It's important to note that drivers with DUIs and speeding tickets tend to pay a lot more for car insurance because they're viewed as riskier drivers, which makes sense considering their track record. So if you happen to fall into this category, Mercury offers some of the cheapest rates in the country. You'll pay around $2,700 annually after DUI, which is about $500 cheaper to the national average of $3,328. And you'll pay after a speeding ticket around $1,987, which is about $500 cheaper to the national average, about $2,500 on average. So both of those are significantly cheaper than what you'll find elsewhere, and would be one of my top picks if you have a bad driving record, specifically moving violations. Who Mercury is not best for. So Mercury is a regional provider. It's only available in 11 states. So if you're not available in one of these states, then Mercury is not gonna be an option for you. And it's also not great if you have an accident on your record. Although it's very affordable after a moving violation, its rates are quite high after an accident, about $3,200 annually on average. There are other providers out there who offer cheaper rates after an accident, so Mercury definitely wouldn't be my top pick for this segment of drivers. Mercury's rideshare insurance plan. So I wanted to highlight this because not all providers offer rideshare insurance, and if you plan on working for a rideshare service like Uber, Lyft, or DoorDash, you will need this optional coverage to stay insured for the entirety of your drive. I've previously driven for DoorDash, and at the time I had no idea that I needed additional insurance. I hadn't even heard of rideshare insurance. Luckily at the time I didn't get into any accidents. I didn't need to file any claims, so I didn't need the insurance, but I could have been in some serious financial trouble if I did need to file a claim and I didn't have the proper coverage. So here's how it works. Rideshare insurance provides coverage to fill an auto insurance gap between your personal plan and your TNC plan. Basically, when you sign up with a rideshare service, you're given TNC insurance. That's insurance provided by the rideshare company. So Uber, Lyft, whoever, they will give you some level of insurance while you drive. And between your TNC insurance and your personal plan, you're covered for most of the drive, except for one gap. There is a gap, it's during what's known as period 1 of your drive. It's basically when you're waiting to get matched with your next passenger or your next order for delivery. Your TNC insurance and your personal policy do not cover that gap for whatever reason. So rideshare insurance basically fills that gap. If you file a claim, if you get into an accident, if something goes wrong while you're waiting to get matched with the next passenger or your next order, Mercury will extend your policy's coverage to that period. Another cool thing to note is that Mercury advertises that coverage for less than $1 a day. So it's about 90 cents a day to make sure that you're covered for the entirety of your drive. That's it for me. Thanks for watching, and have a look at our other videos for more auto insurance tips.